There's a 3-letter word that scares or terrifies most cryptocurrency investors that live in the United States. It's IRS. Now, you don't have to be terrified about it. The challenge that a lot of us have is we are starting to realize that cryptocurrency is a taxable thing. Many folks are starting to realize that. Now, I've been in the cryptocurrency tax space for a number of years, and what I wanted to do today is dispel some of the myths and misconceptions about how cryptocurrency is taxed, and also share a couple of common sense strategies of how to simplify your reporting process. So stay tuned, and we'll share all about cryptocurrency taxation and how it's taxed in 2022. Hey, how's it going? My name is Eric, and I am an accounting and tax professional. I have a couple of companies, but one specifically is called Chain Tax, where we focus on helping investors like yourself file and prepare your cryptocurrency tax returns. I've been in the accounting and tax space for over 14 years and cryptocurrency since 2017, and the amount of misinformation out there, either on Facebook or Twitter or on the internet, is crazy. So I wanted to dispel some of these myths and misconceptions and explain how cryptocurrency is taxed to keep you out of trouble. So before we get started, I would love it if you hit the like and subscribe button if you're new here, and if there's any notifications, click that notification button over there, and in the comment section below, if you have any questions about cryptocurrency taxes, make sure to pop them down there. I'll be happy to answer them. But as we get started, we're going to share all these different tips when it comes to cryptocurrency taxation, and we also cover other topics like NFTs and investing in NFTs and stuff like that. So with that said, let's go over to the whiteboard. Okay, so now let's talk about the 4 different ways, and there's more as cryptocurrency keeps evolving, but let's talk about the 4 main ways that you can make money in the cryptocurrency space. You have when you buy and sell. This is how most people interface with cryptocurrency. They go on Coinbase, they buy some Ethereum, and then they sell some Ethereum. Or they buy some Doge, they sell some Doge. Or they do it in their MetaMask wallet or something like that. That's buy and sell. Now, if you were to swap or trade token, let's say you bought Ethereum and then you traded it or swapped it for Doge, for example, or traded for Avalanche, that transaction is still considered a buy and sell, even though it didn't turn into US dollars. And these are going to be taxed at capital gains. And we'll talk about how capital gains work. The other way that you can make money is through airdrops. Let's say, for example, you interact with a platform like OpenSea, and then a platform like LooksRare says, hey, if you did trading on OpenSea, we'll airdrop you token. Airdrops are considered to be taxable as well. They're considered as ordinary income. We'll talk about that in more detail. Staking rewards or yield farming, or even if you were part of what they call an Ohm fork, like Time Wonderland or Ohm or Fortress DAO, these all fall into this area of staking rewards, where you lock up your token and you get paid a reward in another token, for example. Those are treated as interest. And then finally, if you were to lend out your cryptocurrency and were paid either interest or token from that, there's taxable implications as well. So let's break down what capital gains look like, just for the general terms of it. So let's talk about capital gains and how they're taxed. Now, the first question always to ask is, how long are you holding on to this asset? If you hold on to an asset for less than a year, less than 365 days, it will be taxed as a short-term gain. And if you held on to it for longer than a year, it will be taxed as a long-term gain. Now, this doesn't matter if it's cryptocurrency or stocks or pieces of art. They're both taxed in terms of short-term or long-term. Now, short-term capital gain, you're going to be paying tax on the profit. So if you bought a token for, let's say, $2 and sold it for 10, you're not paying tax on that first 2, you're only paying tax on the $8 of profit. If you hold it for less than a year, you're going to be taxed up to 37%. Now, that's based on your ordinary income tax bracket, which starts at 0 and goes up to 37%. Now, if you held that asset, that token, for longer than a year, longer than 12 months, you'll be taxed at either 0, 15, or 20%. So there is an incentive to hold on to your asset for a longer period of time to pay a lower tax. Now, the second thing you got to ask yourself, besides the holding period, is what is my net profit? And again, let's look at that example of you purchased, let's say, Ethereum at $2,500, and then you sold it for $3,000. The way that they tax your profit is they take your purchase price or your sale price plus the gas fees for transactions, minus your purchase price plus the gas fees. That difference is your capital gain or loss. Sometimes you might have a loss. And then from there, they tax it if it's a gain, and if it's loss, you can deduct those capital losses against your other profits. So it's really nice. And what's really cool about cryptocurrency presently, and this may be subject to change, is if you were to sell your assets to capture a loss, you could rebuy those assets in 30 days and not have any type of wash sale rules to disallow you from taking those losses. So what a lot of folks do is at the tail end of the year, they're like, hey, I need to capture some losses to offset the gains or the profits that I made. So they sell those assets and then rebuy them to be able to take those capital losses to offset their profits. Now that might be subject to change. There was a proposal in this new Biden tax change where they may remove the wash sale restriction on cryptocurrency. And the last thing I need to remind everybody, and the biggest misconception is, folks always say, hey Eric, I did a lot of trading in my Coinbase, but I never brought it back into my bank account. So therefore I don't have to pay tax on it, right? No, it's the same thing just like if you're trading on Robinhood and still didn't cash out. Every transaction that happens, every stock transaction, every cryptocurrency transaction is taxed even if you didn't trade it or exchange it back into fiat or what they call US dollars. So you need to reconcile and keep track of every single transaction. Even if you were to swap it to another token or it got transformed or forked off to another token, it will trigger a taxable implication. So keep that in mind. Now that we've talked about how capital gains are taxed, let's just talk about these three other options of how you can earn money in the cryptocurrency space. Airdrops are treated as if it's ordinary income. And a lot of folks are waiting for hoping that MetaMask is going to do an airdrop of token. Well, the value of token that you receive on the date that you claim it, that value is taxed as ordinary income. So let's say, for example, last year in 2021, there was a company called ENS, and they're basically the GoDaddy of the internet space, or the Web3 space. And they basically said, hey, anybody that's held onto a .eth domain, we're gonna airdrop you some token. For me, I received $4,000 of token from holding my own ENS domain. What that means is I had to reflect $4,000 of income on my tax return as ordinary income, even before I could even sell that token. Now, let's say, for example, the token decreases in value from the $4,000 that it's worth. I'm still paying tax on that $4,000, even though the token might now, and it is now, worth $2,000. So I have a $2,000 asset that I paid $4,000 in tax on. So keep in mind, as a cryptocurrency investor and trader, there's a lot of variables here that can cause confusion and complication in your cryptocurrency taxes. And most folks might say, dude, why is it fair for me to pay tax on $4,000 of income when it's only worth $2,000 now? And that's the challenge, right? You reflect the income and the tax on the point of distribution, on the point of receipt of it. So that's airdrops. Now let's say you have staking rewards. Most commonly people are staking their token on a site like Celsius or AAVE, for example, or many other sites, or they're engaging through either a yield farm. You could do it on Binance Smart Chain where you're putting up token and you're getting paid back a certain amount of interest in their token. Well, those are going to be treated as ordinary income, or you can also look at it as if it's bank interest, just like if the bank was paying interest for putting money inside of their bank account. You'd reflect it as interest, and then now you have a basis in that token. So let's say, for example, I put money in Cardano, and for the year, Cardano paid me $4,000 in rewards. I'm gonna pay $4,000, well, I'm gonna pay tax on the $4,000. So let's say my tax bracket is in the 25% tax bracket. I pay $1,000 in tax on it. But now that token that was received, that ADA or Cardano token, I have a basis or tax basis of $4,000 in it. So if I sold that token that was paid to me in interest for $6,000 later, I also have a capital gain on that profit. So cryptocurrency can be complicated. There's a couple of moving pieces that are at stake. And finally, you could lend out your token. There's different platforms where you could put your token up as collateral and people can borrow against it, use microloans and stuff like that. And typically they pay you either in token or as actually an APY in interest. Again, these are treated as bank interest and should be reflected on your tax return as if they are paid out to you in bank interest. And I know a lot of folks sometimes might be forgetting these transactions on their tax return. And these are things that you need to be aware of. So anyway, like I said, there's a couple of different ways to make money in the cryptocurrency space. You could buy and sell, you could do airdrops, staking rewards, and lending, and each one has its own taxable implications. Okay, so as you've seen, it could be complicated when it comes to cryptocurrency taxes, but it does not have to be. It's relatively straightforward when you think about it. Now, I know you probably have some questions or concerns when it comes to cryptocurrency taxes. Pop them in the comment section below. I'd be happy to answer any question that you have. Or if you'd like to have a conversation with somebody on our team, click the link in the description to set up a time to have a conversation with one of us. With that said, my name is Eric. Again, I've been in the cryptocurrency space since 2017 as a degenerate and in the accounting and tax space for over a decade now. So if you're new here to this channel, you're heavily invested in crypto or curious about crypto, don't forget to hit the subscribe and like button. We make new videos every single week when it comes to crypto, NFTs, and all that cool stuff. And I look forward to seeing you again in the next video. Have an awesome day. We'll chat soon.